Hello, this is Sherrell T Martin with Nitram Financial Solutions, where we provide cloud accounting solutions to help your business thrive. So today I did a budget workshop. We did a workshop, excuse me, on budget and finance. So the first part of the day we talked about importance of a budget, how to make a budget. We actually built a budget for each person. And then the second half of the day we focused on finance, so understanding your financial statements. And so when we got to the second half, we spent a lot of time around cost and which buckets they fall in on your profit and loss. So your profit and loss has three sections. You have income, and then you have cost of goods or cost of sales, and then you have G&A expenses or overhead. So we spent a lot of time on the cost and what goes into each bucket. So that's what I want to share with you today. We're going to talk about that in a little more detail so that you guys can also benefit, because I realize that if these people, these business owners are, have these questions, and someone else also has these questions. So I thought I would share on this week's tip. So the two buckets are your cost of goods sold / cost of sales. Depending on what you do determines what you call it. If you're in retail or you have inventory, you're going to call it cost of goods. If you're or cost of goods sold. If you're in services-based business, then you're going to call it cost of sales. And then the other section is your G&A, and this is your overhead expenses. So the costs that go in your cost of sales bucket are the ones that are directly related to what you do. So without a sale, you do not incur these costs. So think of a business who makes cupcakes. Simple business, right? You make cupcakes. So if someone calls up and says, "Hey, Sherrell, I'm going to buy 20 cupcakes," then I got to go out and I got to buy flour, milk, eggs, the icing, sugar, all the ingredients that it takes to make these magnificent cupcakes. I do not bake, by the way. So do not send cupcake orders my way. So you buy all these ingredients to make these cupcakes. That is your cost of sales, right? These are the costs that are associated with you making the cupcakes. If you don't get the order to make the cupcakes, you don't need to go out and buy these materials and these supplies. Therefore, you have no cost of sales. Your G&A or overhead costs are what I call the ones you pay to keep the lights on. You got to pay them no matter what. These are your utilities, your telephone expense, marketing, dues and subscriptions, rent expense, accounting, legal. These are the insurance. These are things that whether you sell something or not does not matter. You still have to pay those costs. So that's the difference between your cost of sales and your G&A expenses. You may also hear G&A referred to as overhead. You may also hear them referred to as fixed costs. So costs that no matter what you sell, the sales do not affect these costs. You still got to pay them. The cost of sales may also be called variable costs because they only happen when a sale happens. So if sales go up, those costs go up. If sales go down, those costs also go down. So that's our tip for today, the difference between the two different cost buckets on a profit and loss. I hope this tip has helped you. If you like this video, please make sure that you subscribe so you can receive them every single week. And then also share it with your friends, fans, and followers so they can also benefit and learn. And if you want more tools, tips, and resources on how to make your business a thriving one and a profitable one, then make sure you jump on over to our website and grab our free audio CD, 5 Reasons Why Your Business Has Low to No Cash and How to Increase It. So that's been this week's tip. I hope you enjoyed it. I will talk to you next week. Take care.